Hey, good morning. What is going on? Welcome back to another video. Today, guys, I want to talk about Teamviewer. It's a company that I was talking about last year, and since that, the stock just crashed. So let's see if it's still a good buy. If it's something wrong with the company, what was going on lately. So yeah, stay tuned for that. Okay, so I'm here, as you can see on the stock chart, the price it's 14.96 euro per share. So year to date it's almost 25% up, and there should be a reason for that. Obviously, lately they announced their Q4 earnings, so we jump in their report and to see what is going on there and what's the reason for for this jump. So okay, this is the Q4 earning, and also they post the full year 2022 result. So okay, let's see what is going on here. So they here's have some metric, business overview, successful year end finish with a strong Q4. Okay, here okay, growing ticket size. Basically, what they done here is their business, they split it in two buckets, if I can say so. Obviously they say like that, buckets, the SMB and the ACV bucket, which basically means the SMB stands for customer that pays that spend less than 10,000 euro with Teamviewer, and the other bucket ACV, it's a customer that spend more than 10,000 euros per year with Teamviewer. So as you can see here, almost every customer apart from this section here, which is people that spend less than 500 euros, actually went down, and all of the others went up. So the only explanation I can say here, it's those people that was spending 500 euro or less, they moving up a rank, and now they spending more money with Teamviewer. So that's why this year it's lower their number, because overall per total this bucket it's make 502 million euro from last year, was from the last year, which is 454 million. So basically it's 11% increase in total. So yeah, this is the only explanation I can come up with, which is a good thing for them, because for them they cost the same money for it doesn't matter if you spend 10,000 euro with them or 500, for them their expenses will be the same. So better have more customers in these buckets that spending more. And the ACV, again, those they're increasing astronomically, like it's 42% year to date, or better say year over year. So in 2021 they have 93 million euro from these customers. Now they have 132 millions. And this lower bucket between 10,000 and 50,000, it was growing like 46%. And 40, this one it's 71, like customer that spend less between, I think it's 50 and 100,000, they this grow at 71%. Okay, that's good. So this is very good. Okay, here there are some split where they say where the customer come from, like from America, Europe, Asia. So overall all of them grew. So in Europe like 15% this year, 18% in America, and 14% in Asia. So okay, here's some financial overviews, and which they give even more detail about what's happening, so on a quarterly basis, let's say. So here is quarterly billing, so quarter over quarter, but the percentage is in year over year. So as you can see, the billing is growing, and here a little bit lags, but overall the trend is up. So year over year it's growing at a like 20, 12, 12, 12, let's say on average at a 20% pace, which is good. Adjusted EBITDA, like the margin, it's say like 44, 43, yeah, on average let's say 48%, which it's okay, it's steady, it's mean it's okay, so they don't spend too much money on the expenses. Okay, quarterly revenue and revenue growth. So yeah, as you can see, the revenue is growing, and year over year it's like a 14% steady pace going up on average, like 13, 14. Okay, and yeah, so pricing power and SMB. So yeah, like I said, SMB, it's customer that spend less than 10,000 euro with TeamViewer per year. And as you can see, it's kind of steady and growing. Here we have the average selling price for those customer. So as you can see, in Q4 2021 was 728. Basically, I think it's for each customer individually, so how much they spend on average with TeamViewer, and it's growing to 804. So yeah, people are willing to spend more money with them. Okay, the churn rate, it's basically, if you don't know, people that see for the first time TeamViewer, they sign up but they don't go on with paying the monthly subscription. So those guys, they leave the platform. So it's called the churn rate. And here the subscriber, yeah, as you can see, they're going up. Last year they have 640 million. This year 622 million paying customers, like subscribers. They call them subscribers because they have more, because they offer a free version as well of their service for like for personal use. But after that, whatever it's paying, they're subscribers. So they have 622,000. Okay, so here is the side of the enterprise. Enterprise quarterly billing and grow. As you can see, this side is growing pretty fast. On average, like do you see, like last year in Q1 was 107%. So yeah, they crushing on this side. So basically they can move more and more customer from DSMB to the enterprise. I think they give you the average, which is 42% on average growth, so very good. And this is like the good customer with which they spend a lot of money with them. Okay, so enterprise average selling price, as you can see, it's euro K, which means in thousand, so 36,000 euro on average. As you can see, it's kind of steady. It's not growing, not lagging, so it's steady. Net retention rate, so again, it's good, 116%, so it's good. If it stay above 100, it's okay. And enterprise customer, again, last year they've been 2,712. This year, or at least 2022 Q4, 3,666. Okay, so here yeah, they give you the exact number what was happening here. Like Q4 2021, they make 132 millions in revenue. This Q4 2022, it's 150, so basically a 14% increase. And yearly, they made 565. Last year it was 501. So again, very good, 30% increase, which is it's a nice growth. I like above 10%. It's a good growth. So margin, so this is the gross margin. They absolutely killing it in the gross margin, 93-94%. Let's see here. Okay, sales, they went up. So I think, I don't know why, but sales is mean they pay their salespeople more money, or there are more people that trying to sell this product. Okay, marketing, it's flat, and here it's went up by quite a lot of like 29%. This is because, if you don't know, they made a partnership with Manchester United and Mercedes and the Formula One team. uh, you'll see the logo on the shirt of the Manchester, or on the Mercedes on the side. You will see Teamviewer there. So, and this partnership cost a lot of money, and also this is one main reason why the stock crashed when they announced this. People like investor, they didn't like too much this partnership, but at the end of the day, if you want to make money, you have to spend money, right? So if it doesn't matter how good your product is, if nobody knows about you, how you gonna make money? So this is an effort to make more customers, more revenue, basically. And yeah, I for me personally was nothing I didn't like about that. Yeah, you decrease your profit, but over the long run, you'll make more money in the long run. Okay, so research and development, yeah, you have to stay on top of the game here. They spend a little bit more, like 6% quarter year. I mean, since the last quarter, and 80% over the year. General administrative, it's employees basically. They like yearly they went like only 2%, and here quarter, like from the last year, the same quarter, like plus 16%. So I don't know, I think there are more people, or maybe they pay them more, I don't know. So total operating expenses, it's 80 million. It went 6%, and from the last year, so 2021 2022, 17% went up. Okay, it went up a little bit more than the revenue. So yeah, this partnership, they basically kind of killing it. So this is the, I can say, the main expenses, which is, this is good expenses like research and development and sales. Yeah, but this is like the kind of the bad expenses that they have, which is, yeah. But this year, like, they starting to cut their Manchester United partnership, so this number will go down. As you can see, over the quarter it stays flat, and probably the next quarter will be down. Okay, so here the income, adjusted EBITDA, they made that 97 millions, and the last year was 67. Here again, over the full year, 257, 298. Okay, that's good. They have this change in deferred revenue, which I'm not sure what is it. I have to check a little bit deeper, but it's like a decrease of 40 million, and the last year was 21. Okay, which this is cutting very big in their profit. So okay, EBITDA is 63 million, 16% up. Okay, operating profit 49, 41. Okay, 20% up. And net income, okay, profit before tax 45, 38. Okay, they charge him here like they went up 228% the tax. So here they charge him like 20 million they pay in tax, and here only 6. I don't know why they charge it so much. And again here the, well, actually is in line with the growth here. Profit before tax 37%, and tax went up like 39%. I don't know, but this I think is too much. Maybe the next quarter they will you'll have to pay less taxes, or negative, they will be have rebates because they pay too much taxes this quarter. I don't know. So basically, yeah, they make, and this is net income 67 million, 35% up from the last year. And on the share basis, it went up what, 46%. This is because they buy back shares. Like last year they have 200 million shares, now they have 184 million. Okay, and here this is the how they use and they spend the money. So last year they have 505 millions in cash. They added cash from operation 204 million. They spent some money in capital expenditure, paid in interest. They paid 286 million in debt, and they buy back 300 million shares. And others, another expenses, others, like this is income 70 millions, I don't know what is it. Okay, and they've been left with 161 million. Okay, here are the debts. As you can see, they have in 2024 85 million to pay, which is not bad. In 2025 200 million. So yeah, basically if those debts is less than yearly cash flow, so they have the money to pay it easily. Okay, so here the share count. So in 2019 they got 200 million shares. They issue 1 million share on the 2020. So here is for the UB Max acquisition. I think they issue shares and they paid in cash. So if you see in 2020, let's go back here in 2020. Okay, 2020 around here, maybe they issue shares at an evaluation of $45 or euro per share. Okay, and they made this acquisition. Now they bought back share in 2022. They bought back 24 million share, where the price in 2022 was, let's say, 13 euro per share. So basically this acquisition, they cost them half of the price, because if you issue share at 45 and you buy it back at 13, so it's less than half. It's like 70% a reduction in price. So this, I like it a lot. When and usually what company do, when the stock is expensive they issue share, when it's cheap they buy it back share. Overall, good result for Teamviewer, and this is the reason I think the share of Teamviewer, they skyrocket like that. I think this is just a beginning for the recovery. This year will go, I don't know, maybe back to 24, 25, 26, who knows. And yeah, don't take my word for it. Don't invest in Teamviewer because I show you this presentation or whatever. Do more research. Maybe I missed something and I got something wrong. Okay, so if you enjoyed the video, leave a like, leave a comment if you like it. And yeah, also if you want to shoot me a follow on the Instagram, link below. Thank you very much. See you next time. Bye bye.